Oh my, what? How did I get here? Oh, it's crypto catch-up time. Do you remember Terraform Labs? The visionary company that gave us the Terra USD stablecoin and its beautiful sister coin Luna? Well, it turns out their fearless leader Do Kwon was not so stable after all. He was arrested in Montenegro on fraud and other charges. Kwon is accused of masterminding a colossal scam that took down the Terra USD stablecoin and its sister coin Luna back in May 2022, which in turn caused a $40 billion dent in the crypto market and millions of investors' wallets. He created a platform that used a super clever algorithm which was supposed to keep the Terra USD stablecoin pegged to the US dollar. But when the algorithm failed, the stablecoin tanked and brought Luna down with it, sparking a crypto apocalypse. Although Terraform Labs claimed to use a complex algorithm to keep its stablecoin pegged, critics, on the other hand, said it was more like a Ponzi scheme relying on Luna holders to absorb volatility. I guess Kwon should have spent more time on his algorithm and less time on his marketing. He claimed that his stablecoin was the most reliable and most stable in the world. Heck, he even had a catchy slogan, Terra USD, the stablecoin that stays stable. Well, he was half right. It sure did stay stable. Stable at zero. From one stablecoin to another, we now turn our attention to Wyoming's crypto innovation. They're certainly not horsing around when it comes to digital assets over there. Wyoming has done it again. The cowboy state, which has been a pioneer in crypto regulation and innovation, has just passed a bill that allows it to create its own stablecoin. Yes, you heard that right. Wyoming is going to be releasing its own digital dollar backed by US Treasuries. The bill, called the Wyoming Stable Token Act, was signed into law by Governor Mark Gordon on March 17, 2023. The bill establishes a Wyoming Stable Token Commission, which will oversee the issuance and management of the stablecoin. The commission will also hire staff and set up a trust account to hold the assets backing the token. The bill allocates $500,000 for the startup costs of the project, which are expected to be repaid from the income interest generated by the trust account. The commission aims to issue at least one Wyoming stable token by the end of 2023. Wyoming was also the first state to allow DAOs, decentralized autonomous organizations, to obtain legal status by registering as an LLC. Personally, I'm really curious to see how this experiment will turn out. Maybe other states will follow suit and create their own stablecoins too. Imagine having a Texas stablecoin backed by oil, or a California stablecoin backed by avocados. Man, the possibilities are endless. While Wyoming is trying to create a stablecoin, Binance is facing a token of trouble. Binance, the world's largest crypto exchange by trading volume, is in hot water in the US. The Commodities Futures Trading Commission, or the CFTC, has filed a lawsuit against Binance and its CEO CZ for violating US laws and regulations. The CFTC accuses Binance and CZ of offering leverage trading of crypto derivatives to US customers without registering with the CFTC or following any of its rules. The CFTC also alleges that Binance and CZ failed to implement proper anti-money laundering and customer protection measures, and that they lied to the public about their regulatory status. This is not the first time that Binance has faced regulatory scrutiny. The exchange has been banned or warned by authorities in several countries, including the UK, Japan, Germany, and Singapore, for operating without proper licenses or oversight. Binance has also been under investigation from the US Department of Justice and the Internal Revenue Service since May 2021 for possible tax evasion and money laundering. But don't worry, Binance says they aren't worried about the lawsuit because they have a backup plan. Moving to Mars. Speaking of Mars, some investors are looking at a different kind of space exploration. Let's talk about how digital investment assets are making a comeback. After 6 weeks of outflows that amounted to $408 million, digital asset investment products saw inflows of $160 million, the largest we've seen since July 2022. This indicates that investors are renewing their interest and trust in the crypto space. Digital asset investment products are funds that provide exposure to cryptocurrency cryptocurrency and blockchain related companies, either by holding them directly or investing in their stocks or derivatives. They can be traded on traditional exchanges or platforms, offering convenience and liquidity to investors who are looking to diversify their portfolio with digital assets. Bitcoin was the main beneficiary of the inflows, receiving $128 million or 80% of the total. Some clients have stated that Bitcoin is a safe haven for the first time, as it has shown its resilience in this global market turmoil and inflation fears. Other digital assets that also saw inflows include Ethereum at $18 million, Solana at $6 million, Cardano at $5 million, and Polkadot at $3 million. Speaking of making a comeback, let's shift our focus to MicroStrategy, the software company that's been buying up Bitcoin like it's going out of style. MicroStrategy, the software company that has become the biggest corporate holder of Bitcoin, has fully prepaid its $161 million loan from Silvergate Bank. By doing so, the company has ended its credit agreement with Silvergate and reclaimed the 34,619 Bitcoin that was being held as collateral. MicroStrategy took out the loan in December 2021 using part of its Bitcoin holdings as collateral. The loan had a 1-year term and an interest rate of 6.25%. The company used the proceeds to buy more Bitcoin at an average price of $21,925 per coin. MicroStrategy also disclosed that between February 16th and March 23rd, it spent $150 million acquiring 6,455 more Bitcoin at an average price of $23,271 per coin. This brings its total Bitcoin holdings to 114,042 Bitcoin, which is worth bananas $3.4 billion at today's current price. MicroStrategy has been one of the most vocal advocates of Bitcoin as a store of value and a hedge against inflation. The company's CEO, Michael Saylor, has repeatedly stated that he believes Bitcoin is superior to cash and other assets, and that he plans to hold it for a long time. That's a bold move by the software company, which clearly doesn't like to owe anyone anything. Well, except for Bitcoin. It owes a lot of Bitcoin. Well, to itself. And that's all for today's episode of Crypto Catchup. I hope you enjoyed, and I hope that you learned something new. If you did, just do me a favor and smash that like button. Hit that thing. Boom. Awesome. Thank you. While you're down there, you might as well subscribe, turn on post notifications so you never miss another episode of Crypto Catchup, and we'll catch you in the next time. Boom, boom, boom. Oh, wait. Don't forget to leave a comment if you have any questions. All right. Peace out. Boom. Yeah.